Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden truths within corporate filings. But sometimes those truths are more like shocking plot twists. Today we are diving into a report from Office Properties Income Trust that details a rather significant financial restructuring. We are talking about a company that has filed for Chapter 11 bankruptcy protection. Let's break down what that really means for the company and its investors. Before we dive in, make sure you hit that subscribe button and ring the notification bell so you don't miss any of our deep dives. Also, we have a fantastic community over on our Discord server, all linked in the description below. It's a great place to connect and discuss all things finance. So, Office Properties Income Trust, or OPI as they are known, filed this report on the 9th of January of 2026. The key event here is that they have filed a joint Chapter 11 plan of reorganization. Now that sounds like a mouthful, but essentially it is their proposal to get out of bankruptcy and restructure their finances. This whole process started back on the 30th of October of 2025 when OPI and some of its subsidiaries voluntarily began these Chapter 11 cases. Think of Chapter 11 as a way for companies to reorganize their debts and operations while still being in business. They entered into an agreement called a Restructuring Support Agreement, or RSA, which outlines the terms of how they plan to get back on their feet. The bankruptcy case is managed under this specific case number. The big news in this report is the official filing of the plan of reorganization and a related disclosure statement. These documents lay out exactly how OPI plans to deal with its debts and stakeholders. The disclosure statement is pretty important because it explains everything, including what led to the bankruptcy, the expected steps during the process, the voting process for creditors to approve the plan, and how the company will operate if and when the plan is confirmed. Now here's where it gets really critical for anyone holding OPI shares. The plan has a section that basically says the company's common shares will be cancelled and extinguished on the day the plan becomes effective. What this means is that if the plan goes through, the current shareholders are not going to get anything for their shares. Their investment will be gone and the shares will have no value. The report explicitly warns that the trading prices for these shares may have very little to do with what happens when the bankruptcy case is over. They are urging extreme caution to anyone invested or thinking about investing in these common shares. This is a really stark warning. It goes on to say that if the plan is confirmed and the shares are cancelled, any money invested by shareholders will not be recovered. This is a classic example of how equity holders are last in line when a company goes through bankruptcy. Bondholders and other creditors usually get paid before shareholders if there is anything left at all. The report also includes a lot of standard cautionary language about forward-looking statements. They are basically saying that predictions about the future outcomes of the bankruptcy are not guaranteed. There are many risks involved, such as whether the plan will be confirmed, whether the company will have enough money to operate during the bankruptcy process, and how all of this will affect their relationships with tenants, lenders, and vendors. They also explicitly mention the potential cancellation of the company's equity as a risk. It is important to remember that this bankruptcy filing and restructuring are not new developments within this report. The company had already disclosed these events back in late October of 2025. This January filing is simply about the progression of their reorganization plan. While this filing doesn't contain detailed financial tables showing current revenue or profit figures, its primary focus is on the critical legal and restructuring aspects. However, understanding the context of bankruptcy itself reveals the dire financial situation that led to this point. Typically, a company enters Chapter 11 when it cannot meet its debt obligations or is facing insurmountable financial challenges. For OPI, this means their existing debt structure and likely their operational performance have reached a breaking point. The cancellation of common shares is the most direct indicator of the severity of the situation for equity holders. Looking at the situation broadly, Office Properties Income Trust appears to be in a very challenging position. The company is undergoing a fundamental restructuring, which means a significant change in how it operates and who owns it. The most immediate and significant risk is the complete loss of value for current common shareholders. The opportunity for new investors would lie in the potential for a successful emergence from bankruptcy, but that is a highly speculative and risky proposition given the circumstances. The clear conclusion is that this is a company in distress, and the current common stock has effectively zero value under the proposed reorganization plan. Anyone holding this stock should be prepared for a total loss. Alright, that is our breakdown of Office Properties Income Trust's restructuring filing. What is your take on these developments and what they signal for the future of the company and its investors? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the world of corporate finance. Don't forget to check out our Discord in the description for more community discussion. Thanks for watching, and we will see you next time.